Good morning, everybody, and a very, very happy Friday to you all, and welcome to HowToTrade.com, and welcome back to another live stream here in the trading room. I just want everyone to do me a quick favor. If you are across any of our channels, just give me a thumbs up that you can hear me okay. I was just getting that dreaded 1 bar of Wi-Fi for some reason. It's normally pretty good, but it looks like there might be some connection issues, but hopefully it's all sorted. So if you can hear me, pop up and say hello, and you can do that anyway. Let me know how you're getting on this week. Let me know how you're feeling about non-farm payrolls today, which of course is the one that I've been building up to. It's the one that we've all been building up to. The day has finally come where we're going to find out the state of the current US labour market. And it should not be understated how important this actually is, so it should be good. Thank you very much. Hello to you, Wizard Alvin, 55 copy. Elaru1, good to see you. Thank you very much for the confirmation there, and I hope you are doing well. Machine says, good morning, no donations today. Very good. There'll be people that want to do this differently, right? There'll be people that actively trade NFP. There'll be people that actively don't trade on NFP day. I sort of sit somewhere in the middle. I don't tend to trade in the sort of in the hour leading up to the event, to be fair. But if I get an opportunity that maybe gets tagged in the morning of the NFP, and it's not a lower time frame, trade, then I have no problem with still executing my plan just because it's NFP day. But you have to sort of find out what trader you are in that regard. So the purpose of today's stream is to really go through the markets and just prepare ourselves for the possible scenarios with the figures, what it is that could do for particular markets. And the particular markets that I'm really looking at are sort of like your major dollar pairs, gold market, and the stock market as well. They're the sort of main ones that have the volatility around the event, and therefore they're the ones we're going to be focusing on. Good morning to you, Jerry. Good to see you, and thank you very much for the message. I hope you've had a good week, and looking forward to the weekend. We are live across YouTube, Facebook, LinkedIn, and X as well. So if you are around, then pop up and say hello. This part of the stream as well is going to be that if anyone wants me to cover any particular markets that I haven't said I'm going to cover, or has any questions around NFP at all, then now's your time to pop up and let me know, and I'll answer it for you on stream. Okay, good stuff. Right, let me just quickly load up our economic calendars. Let me just do this very quickly. There we go. So I'm heading over to the HowToTrade.com website. I'm hovering over to resources, going down to trading tools, and I'm clicking on our economic calendar. When we do our Monday stream, which is always prepping for the week ahead, it doesn't take a genius to figure out that this is the main event of the week by some stretch. Basically, what we're looking at is these three figures here in the US column: the average hourly earnings, the non-farm payrolls, and also the unemployment rate should be in there as well. Not sure, it might be under medium impact for some reason. It's not, but there it is as well, medium impact. So that's really the news. You can see how much news we get every day, but this is really the main news that we're looking at, and you can check that out on the HowToTrade.com economic calendar as well. For those of you who also trade the Canadian dollar, like me, I've got an active position in USD CAD. I can't help but feel a little bit anxious heading into the actual event itself, because there's obviously such high impact in Canada and high impact in the US, and I imagine that USD CAD is gonna explode in one direction off the back of the release. I hope it's in my direction, but my analysis is in play, and I always just execute and hold my trades regardless of the news events. It's not anything really we can predict. So when I just go back to the two lots of figures we've had coming out. So let's talk about the non-farm payrolls. And basically this figure always comes out on the first Friday of the month. And the non-farm payrolls is essentially the change in the number of people employed in the US labour market during the previous month. And the previous figure was a really low one at 114,000. The estimation this time is for 160,000. The average hourly earnings are also expected to improve from last time out, from 0.2% to 0.3%, and if I'm not mistaken, I believe it's a similar sort of thing with the unemployment rate. The unemployment rate is expected to improve as well. Previously at 4.3%, which was quite a shock, and now expected to be down at 4.2%, so a slight improvement in the unemployment rate. So when you look across the board on those three figures, the expectation is that we won't get non-farm payrolls as weak as last time. And history would suggest that that would be the case. If you go through and have a look through the NFPs from previous months, even during this hiking cycle, typically there's been underlying strength in the labour market. That's what makes me a little bit nervous, because if we do get a weaker NFP print today, I think that's where the markets are going to react really sharply. And I'm talking about probably a lot of stock market weakness, a lot of dollar weakness as well. A figure sort of around what we're expecting would show some stabilisation in the labour market. I'm not too sure whether that would make the stock market go crazy, but I think we would see a continuation in that dollar recovery as well. What I then tend to do is when I then go onto the charts, which I'll show you in just a second, just go through some of the messages. Thank you very much, Dan. I hope you're doing well. Yeah, appreciate that. Cheers. I was hoping that everything's okay. Looks like it is, which is good. So what I do when I trade or when I come in to analyze NFP for you guys is that what I tend to do is I go through the top markets and I basically give you a dovish and a hawkish case. Hawkish meaning that we're potentially going to see, hawkish meaning a stronger than forecasted report, and dovish being a weaker than forecasted report, and what sort of levels we should be looking for if that report does come out. Obviously, for some of you who don't trade NFP, you're just going to sit there and go, well, not really too fast. So the best sort of time frame to look at for me when we're doing this is probably the hourly time frame. So let's start with the dollar index itself, right? Which you can see has staged somewhat of a recovery, albeit towards the this week's been it's been another week of downside for the dollar. So as it stands right now, we're trading at around 100.9. If we get a weaker NFP, and by the way, I think this NFP, I don't know, maybe you say, oh, you're going to say that, but I think a weaker NFP today will end up being the most volatile NFP of the year so far. I really do, because there's so much nervousness about the fact that the Fed are changing policy towards cutting rates. Are they cutting rates because of a soft landing, which is basically the best scenario for the economy when interest rates are being cut, but there isn't too much of a drag on the economy, inflation's falling? That's like ideal scenario. But if the data starts to come in a lot weaker, we start to hear things like emergency cuts, or the Fed have to cut because the economy's crashing, blah, and all that panic and fear, and that's when the markets go absolutely crazy. And that's why I think that today's NFP is going to go a long way in determining sort of the probabilities of cuts and how many cuts and how aggressively. They're going to be really looking at the labour market today and the strength of the labour market, or the lack of strength, should we say. And therefore, if we do get a weaker than anticipated NFP, and that for me would look like a employment change of 130,000 or less, an unemployment rate of pretty much the same as last time, 4.3% or higher, and an average hourly earnings. To be fair, I'm not actually that bothered about average hourly earnings. They're the two that we really should be looking at. So that's my sort of dovish play. I'm not saying we're going to get that move today, but I imagine that we'll make a considerable progress down towards that move, probably come down towards these lows, and probably into next week see some more dollar selling and create a new low and test that 100 area for the dollar. If we get a stabilization in the labor market and what's known as a more hawkish print, which is basically a figure figures which are stronger than anticipated, I could imagine that the dollar may be staging a broader recovery, and we could potentially see a move up to 101.6. And again, you can see I'm being a little bit defensive on the dollar rally, because I don't think it's going to change. It's not going to change the fact the Fed are going to cut. So I'm not sure how much dollar strength we can get. But anyway, the figure that would come in if we look like that would be something like 165,000 or more, or an unemployment rate of 4.1% or lower. That's your sort of hawkish print. Now, that's the situation on the US dollar. Obviously, you then map that towards what you would potentially see on the likes of the pound US dollar or euro dollar, any of those markets. Because obviously, if we're talking about a stronger than anticipated print, we're talking about a stronger dollar, which means euro dollar downside and pound dollar downside. But if we were to get a figure weaker than expected, then that's our dovish print, and we should be then expecting pound dollar upside and euro dollar upside. What I want to do is I want to keep that chart there whilst I just copy and paste some stuff over. Okay. So it goes without saying, if we do get a stronger print, then for me, euro dollar, what's that? That's only, yeah, that's enough. It's a daily time frame actually. It's probably not going to go that far, but that stronger dollar print will put a drag on the pound versus US dollar, and therefore I'd expect a move probably down towards these equal lows. When I've done this before, I've actually been fairly successful. And then obviously our weaker print, probably going to see these highs be tested up here. So something like that. Okay, let me just check if there's anyone saying anything in the room. Any questions? Okay, no, we're all good. Everyone's logged in, which is amazing. Okay, let's look at gold. I know everyone wants to have a look at gold. And by the way, if you haven't already, and you're across YouTube and you're not in our trading room, you're missing out on our daily market analysis, our daily trade ideas. I've just posted one on gold. Quite a lot of detail in there. If you're into detailed analysis, then you know it's a good one for you. I've just posted a nice market analysis piece on gold, literally 10 minutes before I came on the stream. So feel free to have a look at that. So with that in mind, here's my situation on gold at the moment. We've got a nice bearish 4-hour order block there. We've got sell side liquidity, and that really means that if we were to get that stronger dollar print, then we could maybe expect gold to come down towards this sell side liquidity, 2470. Again, I'm not saying we'll get that move today as such, unlikely, but that sets us up for next week. To put that will be our sort of target for next week. That stronger dollar print, that weaker dollar print, sorry. Well, that will be really. This is why the weaker NFP story for me is the more volatile one. I think if we get a weaker NFP story, we see gold breaking out, at least up to 2540 or 2550, and making basically a new higher high on these higher time frames. It will completely blast out this bearish order block, in my opinion. Okay, right. The Nasdaq. Let me talk about that. I got tagged into a trade this morning on the Nasdaq. I wasn't best pleased that I was tagged in this morning, but it is what it is. I'm in a little bit of drawdown at the moment, but I'm just simply following my rules. I'm happy, I have absolutely no problem if I take a loss on trades, to be honest, because my job is to execute my strategy, and that's it. So you can see that we've got nice Fibonacci retracement down towards that between that 38.2 and 50 area. Within that, we had daily imbalance or daily FVG. I entered at the 50% of that, and you can see that really I sort of covered my stop loss, so it could at least give it some room to maybe come and test this gap, or come and test the golden area at this 50 area here as well. So, if I'm wrong about this, that's fine. We'll see how we get on, and this will be an interesting one indeed, because if we were to get let me just delete that. And balance has now been filled. If we were to get a weaker report today, I will completely change my stance, and I'll say, right, I think we're coming for another leg lower in the stock market in general, particularly the Nasdaq, because the tech stocks have felt that quite heavily. because we're going to have all these recession fears and all that sort of stuff. So I could see gold maybe coming, the Nasdaq coming down towards 17,246, which is basically the swing low that was printed back at the beginning of August. So maybe we would see that early next week. Now, the difficulty I have is a figure slightly higher than expected. Again, I'm not really sure if we're going to necessarily see the stock market surge on a really strong NFP, because that's sort of hawkish in nature. That will boost the dollar and that might limit gains. And therefore, I'd expect maybe, we'd come up towards the daily open. But my real stock market bull case for today is if we got a figure which is around the forecast, which doesn't show any panic, doesn't show too much hawkishness, doesn't show too much dovishness, and we get sort of a figure which is roughly in the middle. That's when I think we could get that move higher. So I'm just going to put roughly in the middle report, or like a no man's land report. So a bit more of a difficult one to sort of determine on the stock market than it is sort of on the gold and the US majors anyway. That's for sure. And that's really the sort of main markets that I'm covering for today, and the main sort of analysis that I'm covering. And other than that, it's sort of just a sit and wait and let's see how we get on. Is there any questions that anyone has, either across YouTube or across the trading room, that they want me to cover before we get stuck into the actual main event later today? Because this is only just a little bit of prep work. You will notice as well, in the streaming schedule, you can notice that I've got I'm coming up again at 1:20, which is 10 minutes before the news is released. So I'm going to be covering this event for you live across all of the channels and all of the social medias. So yeah. Okay, let's have a look. Just see if I've got any questions that have come through. A couple. Dan, what happens if it comes out as expected? Should we expect USD strength? Yeah, I would say so. Because the forecast is for it to be for there to be an improvement. So if that forecast does confirm the improvement, I imagine we'd see some mild dollar strength off the back of the release. Bobby wants me to have a look at WTI. Okay, let's have a look at that. Oil looks to me like, in general, like it's going to come down to 6. I always said as soon as we got that breakout here of that, it was that triangle pattern, wasn't it, that we had on the 4-hour time frame. I can't remember where it was, but we got a clean breakout of it, and I said that we should be looking for trades lower off the back of that. I actually thought that maybe we'd get a bounce higher. We are sitting, as one of our members of the community says, I think it was Vikash says, we're sitting on the monthly 200 MA? Something like that. So I'm interested to see. Yeah, it looks pretty vulnerable. I'm not going to lie. Oil looks pretty vulnerable. Now, in terms of comparing it to what we're going to see on NFP today, Bobby, if we get a weaker NFP print, so that dovish one, that red line, then we could probably expect oil to break down below this low. Maybe come and take out all of this at 66 if we got a weaker NFP. The reason is because that will spark recessionary fears. And recession and oil obviously don't go hand in hand. When we've got recession, you've got less oil demand, etc., etc. And therefore, we could expect a bit of a slump in oil prices as a result of that. Again, a figure which is an improvement in the labour market, I think will be seen as positive for oil demand, and therefore we'd probably likely to see a move back up towards at least 70, but maybe even break 70 and a move up to 72.4. So the ranges I'm not got as steep, but still pretty decent moves. And that's really the sort of the two scenarios that we could have for oil prices today. USD CAD, interesting one. Now USD CAD, I imagine, is going to be a little bit of a mess. I'm still holding my analysis. I have no reason to change my view. The technicals for me are pretty strong. We've got two bullish order blocks which sit within the sort of 61.8 area of this Fibonacci retracement on the weekly time frame. That's really clear. And therefore, I'm happy to sort of hold my USD CAD long side. Of course, what we're going to need, Jerry, is if we're going to get that push higher today, I imagine we're going to need a softer, the perfect scenario is a softer Canadian jobs report versus a stronger US jobs report. Those two sort of will probably be enough to sort of push USD CAD hopefully back up towards 1.357. Either way, I can't lose on this trade now because I reached 1-to-1. I took half of the position. So the worst that's going to happen is if it comes all the way down here, then I'll be stopped out at break even, which is fine. So I'm pretty happy about that. So again, I expect that my stop loss will be hit should we get a really weak NFP versus a strong Canadian jobs report. Then I should expect really to be stopped out of my trade. So we'll see how that goes on the release. Okay. And I think that's just about it for the questions. Okay, thank you very much. Okay, Dan, will the big move come on Monday or just then the continuation of this trend next week? Yeah, it's tough because you don't really know, to be honest, but I'm not sure Euro pound will have too much of a reaction. There'll be a little spike of volatility across all markets. I wouldn't worry too much about Euro pound, to be fair. Or are you talking about Euro versus dollar and pound versus dollar? What we should expect is when we get the figure which is sort of way away from estimates, then you get the directional move straight away on Friday. If there's a little bit of ambiguity in the report, and I'll be able to tell you when that report comes out, then typically what we see is we wait for that report to be digested, and then we wait for that real move to come on sort of Monday, Tuesday, and the rest of next week. And that's when we'll get the real directional move. So we just have to wait and see until that comes out. And I know it's exciting and it can be nerve-wracking as well. So if you don't feel comfortable trading on a day like today, just don't trade. Simple as that. There's nothing wrong with that. Okay, good stuff. All right, then, everybody, I will end the stream there, and I'll see you all 10 minutes before the release. Do trade well today, trade safe. Be careful getting into loads of positions or any positions from now until the lead up to the event. It's not going to be much going on until the event, so just be careful. Until then, take care, trade well, and I'll see you in about 3 hours time. Cheers.